Vimal Kejriwal, the MD and CEO at the company, is joining us to talk to us about the latest order inflows that the company has seen from Power Grid and the other segments as well. Hi, Mr. Kejriwal. Very good morning. Hope you're doing well. Just wanted to begin by understanding from you. The pace of order inflows seems to have picked up. Is the rest of the year, that is the last quarter, expected to be even better with respect to order inflows?
Morning. Thanks for having me. So, Anisha, our order target has been around 25,000 crores, and we have now touched around 16,300. So, the balance, roughly around 9,000 crores, should be coming in Q4 or from now onwards till Q4. We already have an L1 of around 6,500. So, I do expect that Q4 would be better.
All right, expecting Q4 to be better. Very good morning to you, Mr. Kejriwal. The shareholders are joining in the conversation. And given the fact that you're expecting Q4 to be better when you talk about the order inflow for your company, let me ask you about your revenue growth, because earlier you said you're expecting about 15% revenue growth to reach about 23,000 revenues in FY25. Is that number still intact, or are you expecting to surpass that level, given the fact that if you're seeing some sort of an optimism come in the market?
Well, I think I will still stick to that number because these orders will still take some time for them to be converted into, revenue. So 15% at 20,000, I think is a good target. I am not sure whether we'll be able to exceed it. But with these orders, what will happen is that our next year's growth also, today our order book plus L1 is around 42,000. So with this, I think we expect that next year also we should do another 15%. If you add 15% on 23, will probably be around 26, 27,000 crores next year.
Okay, so that sustainability of growth is something which is getting better and the visibility turning better. But I wanted to just go back to the order inflow bit, Mr. Kejriwal. Which are the segments and sectors you're seeing increased order inflows from? Is railways coming back? Is it EPC? Does it continue to be power transmission, and that too whether it's domestic or international?
So it's very clearly power transmission. 70% of our order intake has been from power transmission. If you look at order book also, 42, almost 70 to 75% is power transmission. Railways, yes, is slowly coming back, especially on the technology side. The Kavach orders have started getting awarded. So I think we will get some share of it. Even others we are seeing last day before we had announced some orders which had a metro OHE. So railways, we are seeing some increase happening. But I think overall it will be power transmission. And you also asked a question about international. Yes, there is a significant bump up in international, but more or less restricted to the Middle East, Abu Dhabi, Saudi, Oman, etc.
Mr. Kejriwal, how long do you expect this power transmission capex cycle to continue? And I ask you that because apart from this, of course, analyst meeting that happened of Power Grid and they kind of bumped up their numbers for the capitalization and capex targets, there was that expectation that overall it's peaking out, that is the capex in the power transmission, because a lot of spend has already been done by center as well as state. Would you concur with that view, or do you still see a bit of a long runway for these additions to happen? And what is the nature of the work here? Is it amplifying the current transmission lines, turning them into HVDC? Is it about adding new lines? What's exactly working out in the power transmission space?
If you look at the last part of it, almost also 95, 97% is new lines. It's not amplifying. Okay, so that's number one. Number two was, we had earlier talked about 500 gigawatt of renewable power by 2030. Now, if you look at the new national transmission policy, etc., they have now upped it to 600 gigawatt. Now, if you have to set up such numbers, and you need to do at least 50 gigawatt per year, and for that, the amount of transmission lines which will require. So one thing you have to keep in mind is that all these large solar plants will come in very far off areas. So they will be at the border of Rajasthan, Gujarat, and some other places. So, and the consumption centers are different from there. So they will definitely require a large infusion of funds in the transmission sector. And if the government persists with their targets of renewable, which I think they are, then this will continue for at least next 5-6 years.
That's good to hear. There's visibility for the next 5 to 6 years when it comes to power transmission. Talked about signs of uptick when it comes to the railway segment. Talk to me a bit more about that. A, with respect to execution, has that been impacted, or at least execution is going as per plan? And secondly, when it comes to the additional order inflows, apart from Kavach, what kind of L1 positions you have? What kind of potential does it kind of bring on board for the entire railway segment?
So we don't have too much of a L1 position in railways right now. We have become very selective in railways, but the last 2 years have been pretty, I'll say, bad on the railway, both execution and the profitability, primarily driven by prolongation of contracts. See, most of these contracts had required you to work on live railway lines, and last 1 or 2 years we have seen that the railways have been more keen on punctuality of running trains and passenger amenities, etc. So the blockages which were required for us to operate on the projects have not been there. So that caused a lot of heartburn to all the EPC players, whether it is me or any one of our competitors. So we decided to sort of change the mix of our railway orders, and we don't normally don't take orders which will require to work on live lines. So we take orders where we need to do power supply, or you're setting up traction substations for them, which do not require you to block the railway lines. And I think that's turning out well. It's taking some time. And I think this year we'll probably end up with maybe 2.5, 3,000 crores of order intake in railways.
So that's about the railway lines or the railway segment in particular. Ask you the question on your revenue growth targets. Mr. Kejriwal wanted to understand about your margins. What sort of an expectations are you setting in for the margins in FY25, as well as by when do you expect to get back to the double-digit margin growth?
So Cheryl, we have been talking about a 9 to 10% margin in FY26. So whether it would be 9 or 10, difficult to predict today, but it would be closer to 10, I think, or that's our hope. We hope that we'll touch 10, but 9 to 10 is definitely a target which we have set out for ourselves in FY26. FY25, we have maintained that by exit, we should be around 9 to 10%. That's how we'll be 9 to 10 in FY26. For FY25, we have been talking about 7.5%. I'm hoping that we will be able to meet the target of 7.5 for the whole year.
Okay, so the exit rate is expected to be close to 9 to 10%, and then FY26 should just build on to that. But Mr. Kejriwal, what's the expectation of the exit rate when it comes to working capital days? Is that holding steady, or there is some problem emanating from that segment?
So working capital is always a problem during the mid of the year. Typically, we have seen that the working capital comes down towards the end of the year. And we do expect that, we will bring down our working capital when we close the year. We also had a small QIP of close to 100 million, so that would also help us in reducing debt. What we expect is that our interest rate, also what I'll say, interest cost to revenue, will be below 3. Last year we were at, I think, 3.3 or 3.4% of revenue. This year we are targeting to be at around 2.5%. The high Indian interest rate is not helping, but I think with the Fed cutting rates, I think our overseas borrowing costs will start coming down. So that would also help us in some manner. The other thing to keep in mind is that if you're growing by 15%, we will need to, sort of keep borrowing at a particular level. So I don't expect the borrowing levels to go down much, but the interest cost as a percentage of revenue will definitely go down.
Right. Let me get back to your segmentals, actually, your business segments. And I wanted to understand about solar segment, because now that seems to be the buzzword, isn't it, Mr. Kejriwal, when you talk about solar segment? How is the bid pipeline looking over there? And also, are you bidding aggressively in that segment?
So, Cheryl, what we do is we do EPC of solar. So right now we are doing 2 large projects, both above 600 megawatt. We have been bidding, I'll not say aggressively, because the competition is not much. I think what is happening is that we have been staying away from bids where we need to provide the solar panels. But there's a huge volatility in the pricing of solar panels. So as a company, I think we have sort of taken a decision that we only bid where the panels are not in our scope, which in a way limits our bid pipeline. But there is more than enough for us to get what we want to get.
Right. So that's actually kind of comforting, and in fact very optimistic when you talk about it. You did speak about the international market. You did speak about a lot of orders actually coming in from the Middle Eastern market. What about the other geographies? What sort of an update you have from that region, at least the United States?
So United States is actually doing very well. We have a couple of large orders which we are executing. We have bid for a few more, which I think are right now a little bit slow because with the change in the regime, I think people want to wait and see what would be President Trump's say on infrastructure build. But I think with the pipeline which we are seeing there is very large. Also, we have a factory in Mexico, and after the new president has come in, we are seeing a lot of tenders being issued in Mexico. So I think on North America, we are very positive, both US and Mexico.
US and Mexico is also doing well. Thanks, Mr. Kejriwal, for making time and speaking with us, and hopefully chat with you soon and get an update as to how Q4 is panning out.
Thank you, Anisha. Thanks for having me. Thank you.
If you like this video, then like, share and subscribe to ET Now.